Hello everyone, this is Martin here. Welcome back to another weekly video update on what I see is going to be happening. It's my forecast as to what I think will be happening in the markets this coming week, and we're looking at the week of March the 20th to the 24th. So, as always, I always start each broadcast here, each video broadcast with a bit of a theme, and this week's theme, we're basically saying that USD is resting before the next big move, okay? And what does that mean? Well, it means that the USD currency was knocked down flat on its belly last week after the FOMC interest rate decision on Wednesday. I mean, interest rates, yes, were hiked up by 0.25%, and by all means, the U.S. currency should have gained a lot of strength right after that decision. However, everything reversed, and all the other major currencies gained strength off the back of the U.S. dollar. And so, I mean, there are, one can ask, why is this? After an interest rate hike, why wouldn't the U.S. currency gain strength against the other currencies, and why did the opposite happen? Well, obviously, there's politics involved, and I mean, some people were saying that the news that came out with the rate interest hike, the news was a bit dovish, meaning that it was a bit more cautious rather than being a lot more optimistic. And who the heck knows what that's all about, and why the wording comes out the way it does when a major news announcement is made. So, like I said, it's all based on politics, and who knows what's behind it? Maybe the major banks around the world. But anyways, there's going to be a lot of profit taking happening pretty soon, because when the U.S. currency weekends, it's just getting ready to pounce and wait for its next big move. And that's why I have this circled right here. So U.S. currency is lining itself up right now in a favorable position, and then getting ready, and then before you know it, boom, the currency will gain strength again and start its next major move, and who knows when the next major interest rate hike is going to happen. But like I said, for this week, we kind of expect things to be going sideways, resting a bit. I expect the other currencies still to move against the USD. We're going to take a look at that at the charts in a second, and so be ready anytime. Get ready, because USD, even though it's resting, that's what I think is going to happen this week. Get ready for the USD next major move. It may happen this week, may happen next week. So we'll wait and see. Okay, now before we start, I'm going to show you this risk disclaimer. It's something that I should have done anyways before, but I'm just letting you know that all the information given in this video presentation is for educational purposes only. I mean, my main idea, the reason why I produce these videos, is to give you educational content to help you, the viewer, make independent investment decisions. Okay, so that's what this is all about. Um, Obviously, when I make up a video and I do provide it to all my viewers from around the world, I'm getting more and more subscribers. So once again, thank you to all the new subscribers recently. Um, one of the things I want to do is make sure that you get some of the best information that I could possibly provide. A lot of the information in the videos is of interest to me as well, because I do trade based on the information I do give you. I may not place each and every trade, and but the idea being is that I want you to look at the videos, see if you can learn from it. Market conditions can change anytime, and always be aware of that. So I'm not accepting any liability for any decisions that you make. That's entirely up to you. So again, it's educational content. I do trade off a lot of the information and the ideas I do present, but this is for me, and if I can share that with you, all the better. Okay, so let's get on with First currency pair, as always, I start with the Euro USD. Take a look at the daily chart here, and you can see we have price going higher. I mean, take a look as of the red vertical line, which is of the close of the previous Friday. So here we have the first bearish candle. That's the Sunday, Monday trading. Then we have the Tuesday, Wednesday, Thursday, and Friday. So we had a pretty good up week last week, and on Friday it closed down a bit. I do see that the price is currently trending higher, okay, and I expect price to either do one of two things. One, price could come down a wee bit lower up to the 8 EMA, bounced higher, go up to this level, and then come back down again, okay? So either that's going to happen, or I also see price from here retracing a bit, then going higher almost right away up to the next resistance zone. I've marked that in the gray rectangle, and that may happen as well. So it's any one of those two scenarios that could happen. Um, the reason I say it's trending higher, and let me share this with you just for a second. You can see here on the MACD, the MACD line is above the zero level. It's rising, okay? We have some nice green histobars. We could be in a bit of a retracement, again, I say just be aware that price could retrace back down to the 8 EMA rising, and that is rising right here. You can see the 8 EMA, okay? And then from here, bounce higher and then possibly go sideways or down again. So, um, that's what I see happening with the Euro USD. And if we feel that the Euro USD is going to go higher, we want to buy here above here. We want to buy above the 107.60 if we believe it's going to go higher. Or you can just wait for pullback, wait for price to come right back down to about this level. And once it pulls back, look for buying evidence to the upside, and then you want to buy above 106.50 as prices coming back up. Okay. So that's what I see there. Let's take a look at the British pound USD. And here you can see last week we had a really good up week as well. So as of the trading as of this uh, previous Friday, so this is this week's trading. Here we have the Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Okay, huge up day. And if we actually switch to the weekly chart, you see a huge weekly bullish engulfing candle. I'm going to do that right now. It may not be that clear on this chart. I'm going to switch really quickly to an LEOD chart, and this is the same chart, just showing you price in a different way. I'm going to switch to the weekly. Okay, now you can see that really clearly here. So you can see this white bullish candle completely engulfing the previous black candle. So I believe price is going to go higher by just a wee bit. And let me switch to the daily, but only up to this area here. We have resistance. We have a trend line I've drawn in at the tops. Okay, so price most likely will go a little bit higher. It's closed right now above the 50. Let me switch to the my regular chart. There we go. So again, price right now is above the 50, but notice it's right there off the 100. If it clears that, it's going to go higher again and then possibly bounce down again. Now, and you can look for a sell trade once it goes up and comes back down. Now, the other thing is you can wait for price to retrace, and as always, what that means is wait for price to come down to meet with this the 8 EMA, which is rising, okay, and then look for buying opportunity to the upside, okay. And if we think that's going to happen, then you want to look for a buy trade uh, just above, while you're looking for buying evidence once price bounces off the 8 EMA, or if we feel price is going to go down further, then we want to take a sell trade with a close, and this is important, with a close below 123.40. So I've got that indicated right here. So the beginning of this arrow, see, that's the approximate level I'm looking. So if price comes back down to here and closes below this area, below 123.40, then price certainly is going to come down a lot lower. Okay, right now you can see the MACD has just crossed the zero line. Be careful that this is an area where we have to look, where change could happen. If price goes higher, of course the MACD is going to go higher, but this is an area where we have to be very careful. Price may just come back down, like I said, retrace and then go back higher. Okay, so now we get to the Australian USD, and let me just bring that down. You can see basically price has been in a long uptrending channel. Here's the upper trend line. Here's the lower trend line. Okay, price has come down, up. It's kind of stayed here, hugging the upper trend line. It's come right back down again, and now back up. I believe price is going to keep going a bit higher. Again, with this pair, we are trending higher. You can see the MACD line is actually crossed zero, which is confirmation of that price is going, that price is trending higher. And just be careful because we are near a major support area. I've drawn the major support zone as the gray rectangle, but price may come specifically up to this line, this level, or even this level here. These are all um, long-term resistance levels. So anywhere up here, we can expect price to come back down again. Okay, so Australian USD again, we had a huge weekly bullish engulfing candle. I'm going to switch really quickly. Here it is. You can see, you see this? Well, it's not a bullish engulfing. I'm sorry about that. Um, because there is the daily candle. So didn't quite engulf the previous black candle, but it certainly is reversed from the previous. So whether price goes sideways or down first, let me switch back. I believe it's going to go a little bit higher before coming back down. Okay, and the Australian currency is tied in to gold. Let's take a look at the gold chart here. Gold. You can see gold has been going higher. It's closed above the 50. Uh, will could possibly likely go up to the gray rectangle, which is the upper resistance area, and then from there either bounce down lower or charge right through again. And the next logical support, I'm sorry, the next logical resistance after gold clears this area would be the previous swing high here. You can see also the 200 moving averages right here. So if anything, gold could come up, down, and higher. Okay, and as gold is rising in price, so does the fortune of the Australian dollar. So that means Australian dollar strengthening against the US dollar. Okay. Now we get to the New Zealand USD. Let's take a look right here. Again, you can see as of the previous Friday here with this red vertical line, again, we had a huge up movement, down movement up to down to the support where it bounced higher again. So until price clears this area right here, this resistance area, we cannot say that price is really going higher. So right now, this pair is still a bit on the weak side. Okay, um, if we feel price is going to go higher, then we want to wait and buy above 0.7050. Okay, that's right here. So that's the beginning of this arrow. So we want to take a buy above 0.76. I'm sorry. Um, Buy above 0.70 50. Okay, that's what I would be looking at. If I feel that price from here is going to rebound right back down again and break the support, then I would be looking at a sell below 0.6950. Okay, 69.50 to the downside. So that's what I see there. Right now, you can see the MACD is below zero. What does this mean? MACD is below zero. We really are in a seller's market. We should be looking for sell trades. However, the MACD, the blue MACD line shows that price is trending higher. Okay, okay, it's trending higher, and we just have to be careful how high it's going to go. Okay, until the MACD crosses the zero, we cannot say for sure that price is going to continue higher from this resistance area on. Now we get to oil. I'm sorry, we get to the USCAD. That's the next currency pair right here, USCAD daily. You can see last week we had a big down day. Okay, so you can see right here from a high. Whoop, let me just do that. So from a high right here, prices just come right back down. And I believe price right now is could go up just a wee bit, maybe up to the next resistance area. Um, and if we feel price is going to go higher, it's got to close above the 8 EMA. You can see with this line, this red line that's coming down. If it closes above here, then we can definitely say it's going to go higher. And if we feel price is going to go higher, I would certainly want to buy above 134.20. Okay, if we feel price is going to go lower, like come back down, like here, and then break through, okay, then what I would want to do is sell below 132.70, 132.70 on the downside. Okay, we just clear that. You can see the MACD line is coming dangerously close to the zero level. It's at the zero level where the MACD, where we look at the MACD to determine if a change in direction is going to happen or continue. And in this case, the MACD is pointing down, so its price certainly has been trending lower. But you can see over here with the histo bars that we are in a slight pullback. So price is trending lower, but we're in a pullback, and we just have to wait for confirmation at this area. Will price continue going higher, or will price reverse down? And then we look for sell trades to the downside. Now, the Canadian dollar, as you know, is tied into oil. Let's take a quick look at oil. Okay, and you can see the same thing. Oil has come down quite a bit like the previous week. It's kind of gone up just a wee bit and sideways. So that's the reason for what's happening with the strength or weakness for the Canadian dollar, and again, it's kind of just going sideways. But I feel the price of oil, most likely will still come down. Right now, you can see the MACD is ready to cross the signal line, which means that a price could go up a little bit higher before coming back down. Uh, just take a look at this previous channel here. This channel that's supported by this upper resistance zone. You can see this in gray, this huge lower gray zone, which is support. So over the well, basically since the middle of December, price has gone up, down, up, down, up, down, and finally, after a long time, has broken the support zone and come down in a big way to meet up with the 200. I use the moving averages also as target areas to know how far price can move. And in this case, price moved right to the 200, and now it's stuck right there between the 200 and the 8. So if we feel price is going to go higher, it's got to go higher and close above this 8 EMA right in here. Or if we feel price is going to go lower, then obviously we want to sell below one. Oh, we want to sell below here. Okay, so if we believe price is going to go lower. So now we're moving on to U.S. Swiss franc. Again, this dropped heavily after the last Wednesday's FOMC interest rate decision. The U.S. dollar kind of just went south from Wednesday on, and now it's just holding on to a support zone that's shown as a trend line. I believe price may go just a wee bit higher. If we believe price is going to go higher, look for a bounce off of this area, and that means look for you can look for a sell below. Let me let's take a look here. You know, up to Let me just get my crosshair for a second. So anywhere below 100.20. Okay, so if we think price is going to go higher, then you want to possibly take a sell trade, looking for evidence here at resistance. Or just wait for price to come down lower. You can see the 200 SMA right here in the red. Okay, you can see that, and also this support zone right here in gray. So price, once it breaks this area, could come all the way down here, and like after a pullback here, it could come all the way down here, and then you could look for buying evidence to the upside here. Okay, so you can see the MACD is crossed zero. We are basically in the seller's market right now. We're just sideways, maybe waiting for the pullback to finish before looking for selling opportunities to the downside. And also, I just want to show you something. It's much easier to show you on this chart. We had a big, huge bearish candle on the LEOD chart for last week. This is the weekly candle, okay? And so price still has room to move to the downside. This certainly indicates further downward movement, okay? But again, up to at least the previous swing low, and here is the 50 SMA. And finally, we get to the US Japanese pair. I mean, this just basically is just bouncing up and down. I mean, this is the daily chart: down, up, down, up, down, up, down. I mean, I could do this. Let me just put in a upper. There we go. Okay, so you can see what's happening. We have price is just bouncing up and down between a huge sideways channel. Right now, price is at the bottom of the channel. So I kind of think that take a look to the immediate swing low to the left. I believe price could come down just a wee bit lower to this area here, and wait for a bounce higher, looking for buying evidence to the upside. However, if price does break here, I mean, price could have a long way to fall and could make a lot of money for a lot of traders, but you would have to wait for price to sell below 111.40 to the downside, okay? Um, or right here, just wait for expecting price to come down maybe a bit, come back up. Then you would want to wait. If you think price is going to go higher, you would want to buy above 113.50. Okay, for the upside. So that is our weekly forecast. Hopefully, you've gotten some good information from that. Hopefully, you're learning to see what I'm looking at, and good trading opportunities for everyone. Again, that this is the theme for this week is, just watching the strength of the U.S. currency against the other currencies, and I believe we're just biding time. The U.S. currency is just biding time before it makes its next major move. So take care, everyone. If you've got any emails, send them in to me. I'll be more than happy to answer. And if you need some more information on my course material or need some further help, send me an email and I'll see what I can do for you. So take care. Happy trading. We will talk to you again soon.